Sign up today.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Good to be back after that all-day webinar yesterday, which I really enjoyed. We're trying to piece the whole thing together. I'm also adding some of the charts that I mentioned that I would be working on. So when I can get that ready, of course, I needed a little bit of a rest this morning, although I was working at it. I'll get to it, and we'll be sending it off. So thank you very much to all of those that were attending. It was just, I really enjoyed it. Now, as some of you will remember yesterday, I spoke about all the different chart formations that in the ChapmanWave methodology that I'd developed. Many of them are proprietary in the sense that I don't think I've got Stocks and Commodities magazine for 15 years, 20, I don't know how many years. I've never seen some of these patterns discussed that way. So I am going to show you this right now, because I told you that I would update as we move along, especially with charts that I didn't have on the spot. And one of them was, I said I might not even get to it today because it's a little bit more sophisticated, meaning only in the sense, not highfalutin, it means just that it's more advanced in understanding the ChapmanWave methodology. Remember, I spoke about the technique called the ChapmanWave instant restart, where at a peak D on the way up, if there's within 3 bars, there's another higher bar, you can have an alternate count. But there's a particular one that I call the ChapmanWave flat-based restart. And these sound cumbersome, but they are explanatory in their effect. And what it says is you get the ChapmanWave peak D, and then within 3 bars, you get a new high. And then there's a certain bunch of conditions that are met. And in this particular case, it goes to the E, goes to the F, and it goes to the G. But you see the way it keeps coming down? And even at that G, which would be an alternate count, G/C, I'm going to put that in right now, that G/C has a potential to break down or make a cup formation to go back to retest the high. Well, look, the MACD turned down, the stochastic turned down. Everything, though, in my technicals that I discussed all day yesterday held beautifully. And then it ran up, and it ran up to a peak that could be considered, because there's no higher peak than a G, you have to restart. So it could be that GC went to a D. It could also be a brand new B. But I circled it. I typed in ChapmanWave flat-based restart to show that there's a really good chance in this particular technique that it keeps coming down to the base. You remember what I said? That's the one thing I explained about it. And then you could have a left side, right side price time match going exactly to that level afterwards. I don't know of any technique in the world that it took me years and a lot of money to figure this one out. And look, there it is. I typed it in. I didn't have a chance because I've just been so busy. I've been on the phone. We've got a bunch of things that we have to organize for the webinar to be able to send it out very soon. And look at this. It went to that D/B. Turns out it's a D. And where does it go to? It goes to almost the exact low of the trough after D. That's what we were talking about. That's what we were doing live. That's why it was such an exciting webinar, because so many of the things that we were looking at, even though the market was down huge, we also looked at the upside and the downside, and we got the opportunity to do many techniques. So 20 on the E-mini 2-minute chart, 2779 round number, that's the level to watch. And where have we come back to? We've come back to 278025. It could still get there. And that's number one. Number two is, remember what I spent all that time on? I opened the webinar with this particular pattern. You can look at this, have a look at the technicals. Tell me if you are anyone who was in that webinar, tell me if you identify the very technique we spent ages, a lot of the time, all day on, that I said I've used for years, decades. But this is the last 6 months I've been spending more and more time on it, practicing, trading it, doing it. And I recommend that you put it on your equipment, on your software, because it's right there in every package of software. They'll have this particular indicator, and boom, have a look at this. I'm actually just going to do this for now, just to give you an idea. Look at this. You see the top there? Look at that. Look at that line. All right, enough with that. Let's get to the numbers. So thank you to all of those who were here. It was a really, I must say, it was a lot of work talking for 7 hours, well, over 7 hours, but it was worth it. And there's your peak E in the 5-minute chart, and we've only got to see in the 10-minute chart. All right, let's get to our nitty-gritties. Enough with that. Let's get on with the show. The Dow right now is down 112 at 23,392. The MACD is good. The stochastic's flattened. Now it's 89%. It was at 90. Holding in the mid-80s to low 90s is really, that's what you want to see. That's your objective on a buy mode. You want to be holding that level. Every textbook will say over 80% is overbought, under 20% is oversold. And I say, throw those books away. Well, just that page, not the book, just that page. That's just not the way to express it. I understand what they're trying to impart, but it's not right. It's just not right. And I've been saying that for years and years. Oh, okay, so the level to watch is 24,040, 24,040. We need to go above that to start leg E. What's the objective of the Chapman wave? To identify the lowest low bar, merely count each successively higher peak. When you get to the fourth highest peak, watch it closely, because that's where other things can happen. It can recycle higher. We just saw that in that little 2-minute chart where it peaked, it recycled higher. At the same time, if you are going to see some kind of a slide, you need to see that stochastic start to decline sharply with the price. In other words, if the Dow goes back even to the green 9-period exponential moving average of 23,133, you want to see the stochastic drop to about 86%. And then if it dips under the 14-period moving average of about 22,880, let's call it 22,860, you want to see the stochastic drop sharply under 80%. And so far it's holding, days young, anything can happen. Weekly chart did beautifully, went right to the orange. Remember I said, you don't need to use moving averages until they become important. Was it important when we were down in the 1800s, 18,000s, to be even thinking of the 200-period moving average in the weekly chart at 23,900? No. Now it's very important because we're bumping up again against it. The price is we're at 23,395. The orange moving average is 23,937. So we were slightly above it earlier, and now we're below it. So these are all very important. Now let's go to the S&P. The S&P is trading at this particular moment in diversion. It is up 6 now. Earlier when I did the update, it was up about 12. No, it was up 17. And now it's up at 27.89. It's kind of struggling. It's got a peak D. It's just holding steady, going sideways. I love sideways. Sideways is good if you're not going to drop sharply after a peak D. This is the second day. Day is young. I don't want to see it close at underneath 27.58, 27.53. Then I'll say, it's going to be a deeper consolidation, probably going to early next week. Meantime, this is not bad action after what we've done. And it hit the 14-period moving average weekly moving average exact, and then it pulled back. I'll be back in a moment. Dow's down 111. S&P's down 6. Up 6. I'll be right back. Basil Chapman, Tiger Technicians on.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back, and let me just finish up here. So we've got the S&P. It's pulled back quite a bit now. Actually, the S&P is down too. Dow's down 181. This is. I said to subscribers to my opening call. This is going to be a tough period right now. We've accomplished everything we wanted to. We went to the peak D and all the key indices. That's what the objective is in the ChapmanWave. And then there could be a period of digestion. And now the QQQs have gone to a leg eater doji candle right now. It's up 2.69. Even there, you've got this one did a left side, right side price time match, not to the low, but to another key important chart, to a candle. This is what we discussed yesterday, where to choose those things. The inside wedge target line was hit and then pierced, and now it's a little above that. That's this dashed line right here. And I suspect that we could see a little bit of a digestive phase right now. I think Amazon has been really influential. Look at this. Amazon breaks that leg D. The notation I had from yesterday, which was already, I had it down here when I was putting this together. I wonder if I can find it right now. Let me just, it'll be fun. Let's see if I can, I'm not there. I'm not here. Oh, I don't have it. Oh, I took it off. Okay. I don't have it. I have it here. Let me see if I can find it on my charts. Breaking it. Yeah, I had this Amazon chart. This is kind of fun. I had it drawn. I updated it, I think, on Tuesday because I was going to have it, and I had it on this curriculum that I sent out, and it was actually right to there. And I had written, let's look at Amazon.com and live charts and assess what could be next. I was preparing that we would do that, and what the implication is of it's going to new all-time highs at this time suggest. And that was there. But when I updated the chart on Tuesday, it was there. I think it was Tuesday, then Wednesday it was there. Yep, that's right. So this was on whatever it is. This is the day that I did it. This is the day I updated it. And look where Amazon is today. We'll go there in a second. But what I was showing is the plumb line how you can use the low bar for a left side, right side price time match. It took it out. How I used the ChapmanWave inside wedge target lines. The number of bars to the left is the number of bars to the right. Why that's the number. 2185 was where we were targeting. And then I'm looking at this today, getting it ready for sending out. And lo and behold, we've got Amazon trading. Look at this. That's where we were. This is, you see the D right there? The little D, I haven't updated the daily chart. That's where the D was. And then I would have put it here for that little picture that I had. The next day, when I did take the picture as a follow-up, it was there. So raise is called a floating ladder. So it's leg D. There's leg D. Wait a minute, it's still a floating ladder. So the leg D yesterday, during the show, that's where it goes. This is the live webinar from 9 to 4:30. And today it goes to there. And what's the high? This is something we discussed yesterday in the webinar. I said, look for round numbers. 2461.00 round number high. I don't think that that doesn't necessarily have to stay, but I'm just putting it in here. This has had a couple of round numbers before. It doesn't seem to even bother them. Look at the round number. If you're talking about what's the big deal about round numbers? How about this? Oh, how about this? Do it right on the chart. Oh, this is going to be very difficult. TVIX. This is the 2 times long. The volatility index, 1000.00. Round number high. As it happened that day, I remember being on with Tom saying, Tom, we just hit $1,000 in the very emotional 2 times long volatility index. I wonder if that's not going to be the high that stays no matter whether we make new lows or not in the market because of the mass hysteria based on news, based on the media. And I think that could be. We're down at 240. All right, so let's go back to the Apple. Apple right now, trading, Apple? What was I looking at before? Why is that Apple? It says Apple at 284, AAPL. Did I just do something wrong? Apple chart? Did it just go back to something? Why is it trading at 284? Oh, Apple. I wanted to go to Amazon. Oh, it's been a long 24 hours, you can tell. Okay, we're going back. We're going back to Amazon. A little interruption there, a little disruption of the mind. 2461.00, round number high. I don't know if that's going to stay. I'm just saying it's really interested in leg D, and it's about to do that. Now, if Apple starts to pull back, it's going to impact the Qs. Apple is part of the Dow and the NDX 100, part of the S&P. Amazon is not part of the Dow. Amazon's by itself. It's really the Qs that it's going to impact. So look at the XLK. Let's see where that is. XLK trading right now. Peak D hasn't made a new recovery high, made a high. Remember, what's the objective of the Chapman wave? To get you to at least a peak D. And there it is at 89.13 on the 14th. And we're trading right now at 87.15. Holding very nicely, a little cluster formation, but watching it closely. All right, now let's go to the IWM. The IWM is trading right now at 114.84, down 296. Oh, I should have typed that in while I'm doing this. Otherwise, I'm stuck. So 124.88, 124.88 right there. So 124.88. And we're trading now at 124.88, and we're down 10 points in the IWM. Oh, that's really something, isn't it? All right, doesn't matter. Here we go. Stock, look, it didn't even, the weekly chart, it just hit the pink 9-period moving average and pulled back. It is really weak. Had a couple of questions. I'm going to get to them right away. Let me just say quickly, gold is holding very nicely here. Keep typing on the chart. I've got to get, after all these years, you'd think I'd be able to do that. Gold is trading down 5 at 1735, made a peak C. I suspect it's still going to go to a leg D, but I think it's getting a little toppy and then it could go sideways. I'm even going to put this in here to say I'm anticipating some kind of a trading range like this. Why is that not working there? Okay, good. Some kind of trading range like that, maybe a little lower, but over a period of between now and next week, somewhere in there. Silver is trading so it's at 1735. Silver's trading at 1556, up 0.35. It has gone to a peak D. Obligation of the Chapman Wave buy mode is to get you there, and it got you there to the fourth highest peak. Now other things can happen, and I suspect the 1667 200-period moving average could be hit very soon, but it needs to hold 1510 to 1490 in the interim if it just digests this gain. The weekly chart went to leg A above the 14-period moving average, and now is pulling back. Let me talk about the dollar here, DXY. Dollar is trading very... I love this pattern. We discussed this over and over yesterday. It's the dreaded H pattern that actually holds well. If it holds well, it can go where? Remember, folks, we went an H pattern, lowercase h, can go to a lowercase m as a second arch forms, and that's what I think we're looking at here in the dollar. I'll be back in a few minutes. Basil Chapman, Tiger Technicians out, Dow's down 232.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman Wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Remember we talked about the ChapmanWave flat-based restart. This is where you get the ChapmanWave instant restart at the peak D. You quickly move higher. Your alternate wave counts. I had a whole thing on the G/C that you can still get a cup formation that eventually makes the D with the technicals weakening, not strengthening. Then it pulls back, and if it pulls back in the ChapmanWave flat-based restart, it can go underneath the original trough after D, which was 27.79. We're trading right now at 27.63. For those who took the webinar yesterday, you remember the two little aspects that we were looking at that said, well, once you cross negative, you can keep going down that way. There's a positive. Now we're in the negative area. So now we're testing the left side low in this left side to right side price time match of 27.64. Whoops, we just took it out. We're at 27.62. Look at the MACD, the way it failed over there at that peak D. Look at how it turned down. Look at the stochastic. Just remember the rule that I had of the number of bars going above 80% and then coming back down. This is what it did, and the other things that are turning down. So all of these, I said yesterday I would try to follow up during my show live for subscribers and everyone else who's there, just to show you how this works in real time, and that it's not like you need any particular day. You could just any day is a day to practice these techniques. So let's get on with our story. Story says that we're looking at crude oil. Crude oil now is trading. It's testing. It's made. You remember the pattern that I said, the rectangle formation, how you can make the pattern the lowercase h that becomes a lowercase m. So there's a little baby h. This is a Russian oil. This is actually, I've seen very seldom of these ever. When I say ever, I actually mean ever. And I'm talking about not just 100 or 1,000 or 10,000 charts. I'm talking about not 100,000 charts. I'm talking about at least 250,000 charts. Actually, it was about 10 years ago I said I must have done about 250,000 charts. So, yeah. So whatever it is, this is very unusual. It means you had a little bit of a bounce. It wasn't strong, and it went to a lower low. Then you had another bounce and it attempted to rally. Now it's making this whole 19 area in crude oil. This is the continuous contract. I have nothing to do with heating oil or the New York finest, whatever it is. I'm right here looking at the continuous crude oil contract, and look at that monthly. That is like a 1-to-1 to the downside, even greater. This is ugly. I mean, there's a nice way to put it, and there's a realistic way. The realistic way is to say, wow, this is talking about world economies. Let's look at wood, WOOD. That is the iShares Timber and Forestry ETF. It's come off the low very nicely. Peak A, peak B, peak C, and peak D. Oh, thank goodness. The weekly chart is okay. It's not great. Monthly chart is horrible. So this is international. Let's look at high-grade copper, and then I got the questions that I'll go to. One was Exxon. So peak E in the high-grade copper, it's actually had a very nice percentage bounce off the low, but a horrible bounce in the monthly. The weekly chart is not bad. It's the pink 14-period moving average, 2.29. It better hold 2.25. Break under that. That's not going to be good. It needs quickly to go to the 2.37s. Okay. So Exxon is down. Exxon Mobil multinational oil trading down $1.16 and 39.32. So the question I was asked, and it's really going to, that's not the April. So that must be next week's expiration. Bob, I will get to Microsoft. I'm going to just have to write these down. Today's the day that I need to write down. So Microsoft, Bob, and then I had ExxonMobil, if I can just find that. If you have time, Zip wants to know, Basil, if you have time, could you please do a read on ExxonMobil, have a $40 call that expires at 4/24. Oh, at least it's not this Friday. It's a week from Friday. And down 17%. Okay, so we know that with option calls and puts, you really have to be prepared. Don't do this stuff unless you're prepared to say at any point, not only could it all be wiped out, but there's a guarantee that at least some part of the trade could have slippage of 25 to 30%. Even if you're right, you could in the interim. And the reason why you sometimes have it is that you are prepared not to hold the stock through a pullback if you're long, but you're prepared to hold the option because it gives you time. And you don't have to worry about the intraday whipsaws. So hopefully this is what Zip's looking at. Why? Because yesterday's pullback was just a little deeper than I would have liked in a pure cup formation, left side, right side price time match. Now it's really looking, I haven't got any veracity here on the left side to do this, but I'm still going to do it. Let's just imagine that there's a cup and handle formation, and this is the handle. I would say to you not by tomorrow, but you can say by Monday afternoon to Tuesday morning at about this time, Tuesday at about noonish Eastern time. You want to see at least a rebound above today's high of 40.48. You want to see something, you definitely want to get to $40 higher than you are from here by tomorrow, but preferably by Monday afternoon going into Tuesday morning. You want to see it tackling these 9-period moving averages, the 9 and the 14-period moving averages, and they all have exactly today's high of 40.48, just in that area as resistance. You want to break even just 2 pennies above it, and you've got a whole week to go. I think you're going to have an opportunity to get some money out of it. And if you have more than one position, I would put in a sell right now. I can't tell you what it is. I can just guess. If it's for tomorrow and it's trading at 39.33, you're probably looking at 27 cents or maybe 32 if you're lucky. 27.30, lucky. Probably it's less. It's probably about 22%. But looking at next week, you can add at least another 25 to 30 cents on it. So if you're lucky enough to have no, I don't think so. A 40 call for April the 24th, a week from tomorrow, it's probably no more than about 15 or 16 cents. I'm just guessing right now. Yes, I'm going to say to you, I would put a price in a little bit above your cost. I have a rule of thumb that says if you are down a little more than you anticipated, and then the price gives you this golden gift and comes back, what most people do, they say, oh, great. And then they hold the position as if it's a fresh position and everything's great. No, I've learned a long time ago, immediately take off at least something, if not get out of the whole contract, because if you're so convinced, take your money off the table at a break even or just a fractional loss or a fractional gain, and then look at the same position and say, would I buy it now? I guarantee you that you would not buy it now. But that's what we do. I've had 3 opportunities, the one in particular that I was down a lot in, I can't remember, the futures, options, I don't know what it was. And then the darn thing came back and was not just giving me a gain, it was giving me a fabulous gain. I'm looking at this and I say, cool. And I just didn't do anything, even though my rule of thumb is immediately when it breaks even, go out, go back in fresh with a tighter stop. Do you know that 3 times I could have really done well? Now, I ask you, just before we go to the break, what happened in the end? Did I make money or did I lose money? Yep, you got it. I lost money. Dumb. Greed and dumb. That was greed because I was expecting more gains. I'll be back. Dow's down 250. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I am looking at this here, D. So I'm just doing this quickly. So this is the XM chart. I'm probably going to run out of time. So A, B, C, D, E. C1, C2, yes. C1 right there, C1. Remember we discussed this. Yeah, I do this live on the show. We talk about the ChapmanWave C1, C2 pattern. And then you can start over again. It goes A, B, C, D. So I'm looking at the XM chart, and I'm just going to say to you that I'm going to concur with myself that if you're able to get out of at least some of the call options that you have, if you have just one, you have no choice. But you have some call options. If it can get close to break even, I'd immediately in my mind, and remember, you can't, some people, I've never been able to put a stop on options, but I think by now you can put stops. I just haven't even practiced that. I'm just out if I'm doing anything. So I'm just going to say to you, if you can get close to break even, maybe you could roll it into next month, because I do think that Exxon has a chance to go a little bit higher. And I also think it's stuck building a platform at the bottom, somewhere in the 36 to 34 range. You don't want to even hear of that if you're in a call option 40. So this is what I'm going to say to you. Nothing that I mentioned has changed, other than I'm showing you now the chart. There are two fighting patterns. One is the potential for a cup formation, and I think we're getting close to some kind of a rebound. You want to see a rebound. You don't want to close at the low of the day on the call, because that for Monday it'll wipe out premium even more drastically. You know what happens the following Monday after Friday's expiration of the weekly. In this case, it's the monthly calls. So what I am saying to you is I want you to roll into, at least allow that if it can get to the 40.30 area, you're going to be at least okay, or at least a minimum. Start thinking that you might, if you have a couple, you might want to just get out and say, whew, thank goodness. And then you can keep some in, but you got to keep it on your radar all the time and have a mental stop. You do not want to see Exxon go under 39.73 if it even touches 40.15 by Monday or Tuesday. You do not want to see that happen, because that'll shrink. Rather just, in fact, I would take my money off and have just one of those just a crazy Thursday. If it's trading at 39.63, I'd buy some crazy calls for Friday. That's next week, with a chance that you could go to 41 and buy the close, and just say, then I'm prepared to lose. But that's purely a lottery. In this case, you asked me the question, therefore you're serious about this. You don't want to lose the money. I'm saying if you can get a chance to get back to break even with this shorter time span, get back and then start again. or get back most of your money, keep maybe one or two as a lottery and see if it can move up. And at that point, I would make a mental stop to say I'm following the price of Exxon. As long as it's over 40.15, I'm doing okay. The moment it goes under 40, you want to be out. So that's it. Next question I had was Microsoft. Could I do now show my chart formations of Microsoft? Microsoft, right? Oh, and thank you, Paul. Yes, you're a good idea about the green tea. That'll do something. Microsoft 173.68 up $1.79. The thing that you got to keep in mind, and it's one of the reasons why, regardless of what I'm reading and hearing, et cetera, and believe me, when you talk about hospital news, I'm right here. I hear this firsthand. So it's really depressing, especially for the workers. The right at the front group workers, it is horrible. Even if you have equipment, it's horrible. So yeah, I understand it. But I'm looking at the charts and I'm saying I could make a case that if there's even a hint that it can go slowly and smoothly, that the market is going to, the getting back to work, the market is going to like it. I think that's important. Look at Amazon chart. It had a ChapmanWave falling axe formation. We spent some time on this yesterday. I'll just draw it in. It's just you make a strong move to the upside, and then you start to roll over, and it makes a cone formation right there. So it makes a cone formation, and if it breaks above it, you can get ChapmanWave 1-to-1 right here. So it broke out there. This is not a 1-to-1, but I'll show it anyway. A price extension in the same parallel move. That's the whole thing. The difference about this and other 1-to-1s is in this case, you're looking at the degree, the angle of ascent as being the match, not just the number. So this says you've got to move from the low, I didn't type in, of 132.52 on the 23rd. That was the day that we went long a whole bunch of positions, the day of the low. And then you got an extension up, and I'm usually very conservative. I go to the trough after the breakout, and that's perfect. In fact, it went a couple of pennies higher, 175.94, and the high today is 176.74. Then if that's successful, I'll wait just a day or two. If it pulls back, then I'll say, okay, now let's go to the same thing, but from the trend line. That's the importance of this trend line. From the trend line low, let's see what we get. And that takes you to 181.14, or let's call it 181. So I'm going to leave this in here just to show you that it's worked perfectly to now. Let me just go back. It's worked well. And if it holds and pulls back after leg E, I'll do the other stuff. So I hope that helps you. What was the question, actually? Could I just do Microsoft? Duffy, I used to draw charts by hand. Yep, Duff, that's what I did. That's how I got into the business with engineers' graph paper. One little tiny square was equal to 1 point. I've still got my charts somewhere up here, going back to 1920 actually, on a closing basis, right from then. So anyway, here we go. No, I wasn't around in 1920. I'm just saying the charts go back. All right, that was a question there. Next question was, could I look at, I'm just doing this at all. So I'm looking at this. A lot of typing into the den. There. Basil of time now, I did that. Exxon. I hope that satisfied you. That was Zip. I hope Zip that kind of covered what you were looking for. Anytime it's going to 39.30, you know, I don't have to tell you, you're in trouble. Bob wants to know, Basil, can you show a Microsoft chart? There it is. And in the 120-minute chart of the Microsoft chart, if this is a brand new buy mode, A, B, so on. Hey, I got to go all the way back. I'll do this quickly. A, B, C, D, E, and then it pulls back, and then it goes A, B, C, unfulfilled, E, so that's D/C, and then it goes to DE. It's in a peak E right now. Leg E, no, peak E, and it looks like it wants to test the 14-period moving average over the next day or two The 9 is at 172.70, and the 14 is at 170.97. I think there's limited upside right now. It could go about 30, 40 cents higher than today's high, but 176.74. And this is suggesting to me that the general market, especially the Qs, are in for a little bit more of a pullback later today and going into tomorrow. That's interesting. Okay, I'll be back. Dow's down 210. S&P's down 7. Basil Chapman, Tiger Ignitions Hour. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So I got a bunch of questions. I'm actually going to deal with some of them tomorrow more in detail in the Tiger Technicians Hour. That's the Friday edition, which is really based a lot on the Chapmanwave. Had a question about work, which is right there. Work is Slack Technologies. Bumping up like this inverted head and shoulders. It's just a fabulous looking pattern. No, it's a head and shoulders pattern. And yeah, inverted. And it's bumping up. It made a round number 30 today. It's in leg C in the daily. It made a peak F with a V-shaped pattern. Remind me tomorrow. I want to talk about the V-shaped patterns. Seen tons of them. I like this. It really looks very good. It's an IPO. It made a low in the 15 area. It's double now. Very good. I like it. On a very short term, it might have to do a little bit more digesting as it tries to build strength to hurdle and push right over the resistance at 30 to 30 and a half. I like it. Yes. So that was a question. The next thing is Go, which is Go. I never remember. Grocery outlet holding. Yep. I like the stock. It was doing well. Buzz in the Den has got this, and he's going to always say, Basil, do you like 36 target and go in my OPEX tomorrow? That's with the options. Make cash my 30s now and roll a small piece of profit into the 36s. What I'm going to suggest to you is that I like what you're talking about. Split it into the part you're going to take off today before you do the rollover. Split it into take off right now, but everything about the technicals is good. If there's any strength at all in this independent of the market, and then the market just has a little bit of a bounce, this should rally, and I'd just watch it closely, and as it's moving up, I try to extricate myself at higher levels. I'd get out of the position. But then the rollover, I agree with you. I think it is going to go to the leg D above the 38s and make that peak C. So, yes. So, folks, you've got Steve Rhodes coming up. You've got, let's see, Steve Dave, and then Tom O'Brien. Should be a great day today. And thank you for being here. I do appreciate all of you who came to my webinar yesterday. Much appreciated. It's a lot to put together. We try to put it together. We'll send the package out as soon as we can. Hold tight. We've got Steve coming up. And have a wonderful day. And appreciations for being here. Thank you.